Is it possible that if we find out this is some sort of thing coming from the Chinese government, all these objects, is it possible that this situation does become a market mover if it ramps up geopolitical tension, or is that just completely bonkers?
No, I think this is going to ramp up the tensions again. It already has to some degree because they really had come down after the G20 summit in Bali. There was a sense that both Biden and Xi were really trying to bring down the tensions. But the longer this goes on, I think the more questions are going to come out about that. You know, the visit that has been postponed by Blinken, and I think that other things will be delayed and postponed. So I don't think this is going to leave our radar as easily as we thought when this whole issue first emerged. And, you know, the tensions are ones that are going to stay with us over the medium and the longer term. I mean, this is a strategic competition. It's very much focused on national security, military issues, and defense issues, as well as tech issues, advanced tech issues. So I don't think this is necessarily going to leave the headlines that easily.
Okay, yeah, I'm glad. Thank you for not telling me my question was insane. But I mean, you've got this crazy situation going on. If we find out it was some kind of Chinese sort of excursion or whatever, radar testing, whatever it may be, you just wonder, you know, you wake up one day and Dow futures are down a couple of 100 points. Okay, outside of that, assuming maybe this just kind of goes away, what is the most important thing, economic number, event, what have you, to you and your team?
I mean, look, we're still overweight on China equities, and the reopening trade is still one that has quite a lot further to play out. I mean, now we are looking at growth in China for the year at 5.6%. I mean, that's materially higher than what we had thought before. And a lot of the tourism and travel and commodities stand to do well here. And what we're seeing is that the China reopening remains more durable than I think the European lift, and there are certainly more concerns, about the U.S. right now. That even though we may get a slowdown, the pause is going to take longer, and maybe we won't even get a pause. Maybe we will be looking at a terminal rate that still needs to move higher, given the focus on the stronger U.S. data and the inflation numbers and the wage pressures that continue.
Yeah, if we get so we had the revision for the December inflation number. We got that revision late last week, showed that a lot of the things we hear about inflation maybe not accurate because inflation stayed hot, at least as far as the data goes, Joyce. What happens tomorrow? And I know you're not a short-term thinker necessarily, but what happens tomorrow if the CPI number comes in red hot? And what happens tomorrow if the CPI comes in ice cold?
Well, look, we're looking still at two more Fed hikes, 25 basis points each. But I think you could reinvigorate a debate on where does the terminal rate need to be. The market had settled on 5%, but is it possible that it needs to be higher? So you have the bumper U.S. jobs report for January. That has raised some hopes that the U.S. economy may avoid a recession. But I think that the question is, are you going to actually need more tightening here ahead? And will the signaling and the communication need to reflect that? So we've seen Treasury yields move markedly higher over the last couple of days, and that could continue.
Yeah, and that's going to be the theme. But okay, so we got more rate hikes in your forecast in March, and then one again in May, and then theoretically we're done. Terminal rate probably 5.5%, maybe a little bit higher, maybe a little bit lower. Then what, Joyce? And I hate, we're always looking for the next thing, but the Fed at some point will come off the headlines. Rate hikes will be over. What's the next 12 months after that going to be focused on?
I think the market's going to ask, was the first quarter of the year actually the high point? Are we going to see the earnings have to come down here? That we will see that some of this excess savings will come down as well. And we're looking for slower growth, even if the U.S. economy does avoid a recession. So I think the question may very well be that did we have this very front-loaded rally because we had a number of turning points that were unexpected? China's earlier than expected reopening, the very warm winter in Europe, and the lower gas prices, and then also in Japan, the surprise move in Japan, where the stronger dollar story has also gone through some revisions. So I think many people may ask if the first quarter was necessarily a high point, and then we see some of these medium and longer term risk, a slowdown, earnings forecasts coming down, profit margins coming down in the second half of the year.
Yeah. Here's what I worry about, Joyce. I look at consumer credit data, and maybe I'm a little bit scarred still from the financial crisis and what have you. Nearly $1 trillion in revolving credit. Much of that is credit cards, auto loans, mortgages. Most of them are fixed. I get it. But the inflation on the consumer credit side, I know we've gotten wage gains, but are the wage gains enough to mitigate the massive jump in just debt service costs that Americans are likely to have in months, quarters, and years ahead? I just don't see how we keep putting everything on credit cards forever. Or am I being, again, just a Chicken Little?
Yeah, no, I mean, look, I think that the consumer still is in a stronger position than they were in 2019. But remember, we had this massive excess savings cushion that was more than $2 trillion at the beginning of at the beginning of last year, and this has come down. And by the second half of the year, that will have been really evaporated. So I do think that you're right to focus on just the strength of the consumer, because that's ultimately what's going to determine whether we have a recession and what kind of recession that's going to be. And the excess savings cushion has really been a buffer over the last year and a half.